I'm David McAlvany, the CEO of the McAlvany Financial Group, and today I want to discuss the gold market, volatility specifically on the upside. We have seen the gold market recover 21% off of its lows at the end of June, and silver recover 25% off of its lows in June as well. And I want to discuss specifically today backwardation, the notion that the futures market is telling us more than you know, more than you think, more than the price would indicate. In previous news updates, we've highlighted the technical nature of the decline, how the fundamentals have remained very strong for the metals market. And when we talk about fundamentals, specifically we're talking about supply and demand. How many ounces are there and how many people are out there buying those ounces? Today we have a situation where the demand side is very intriguing. Backwardation is when a futures contract, the front month in the futures market, is more expensive than any of those months on out into the calendar year. Ordinarily, what you find is contracts are more expensive as you move out on the time continuum. Why would that be? Because you're paying for money. You have to factor in the time value of money, and the longer dated those future contracts are, the more you can expect to see an increase in the cost of buying that gold or silver or whatever asset is in question in the futures market. When the front month is more expensive than future months, what it implies is that you have a tremendous amount of physical demand, immediate, real-time demand for the metals market. Now, it's not uncommon to have backwardation in any market, but it usually happens a very minor amount and only for a day or two. We're now into our 8th week of backwardation, 2 full months of backwardation. Again, it's not the degree to which we are in backwardation, but the duration, which I think is very intriguing, implying that there has been a steady accumulation since July through August, and now as we head into September, in the physical markets, which even though we continue to see some selling in the paper contract market, we have physical demand which has been off the charts. That can be geographically oriented. Certainly the Middle East has had very strong demand for gold. India and China have had very strong demand for gold. And the removal of gold from various warehouses around the world has seen physical metals, which were held there in settlement for futures contracts, simply disappear as people have called for the metal. They want the metal in hand, and they want it now, not tomorrow. So while backwardation may seem like an insignificant issue in the world of futures contracts, what it does tell us is that there is more feet coming into the gold market than the price would imply. And I think that's very important to remember. We have a supply-demand imbalance where there is more demand than supply. We also have over the next several weeks major implications with mines going on strike in South Africa. Although they are not the 70% producer of the world's gold, which they once were, they still are a significant producer. And now with labor contracts in question, with mine unions requesting anywhere from 60 to 150% pay increases, we will have, I think, tremendous pressure in the gold market over the next month, 2 months, and as we head towards the end of the year. It's our expectation that we see short-term weakness as we have added, again, 21% to the price of gold, 25% to the price of silver, and it would be very ordinary for the next 10 to 12 days to see something of a correction, with a conservative estimate of year-end pricing above $15.50. We could, of course, see a major breakout, and that would take us into the $17.50 range by year-end. This breaking news piece is brought to you as a reminder of how unprecedented backwardation lasting for over 2 months actually is. Thank you for joining this breaking news piece. Join us each and every week on the McAlvany Weekly Commentary for these topics and many more. If your friends and family are not aware of the work that we do, make sure and subscribe, like, or share the information that we've provided with them at your first opportunity.